What if I told you the silver price you see on your screen is not real? What if the number flashing on financial news every day has almost nothing to do with actual silver supply and demand? What if powerful banks, massive paper contracts, and a system designed decades ago are quietly keeping silver cheap on purpose? Most people never question it. They just accept the price. But once you see how this game works, you can never unsee it again. Stay with me, because by the end of this video, you'll understand why silver has been suppressed for years, who benefits from it, and why this story may be reaching a breaking point right now. Welcome back to Wealth Wave, where we break down what's really happening behind the markets, without hype and without fluff. If this kind of deep market truth matters to you, make sure you hit like and subscribe right now, because it tells the algorithm to push this message further and helps the channel grow. And trust me, what you're about to hear is something most people never get exposed to. Let's start with something simple. Silver is not just another metal. It's money. It has been money for over 5,000 years. Long before paper currency, long before digital dollars, silver was trusted across civilizations. Even today, silver is critical for modern life. It's used in solar panels, electronics, medical equipment, electric vehicles, military technology, and more. Demand is growing, not shrinking. At the same time, mining supply is tight, expensive, and slow to increase. If this were a free market, silver prices should reflect that reality. But they don't. And that's where the manipulation begins. The silver price you see is not set by people buying physical silver bars or coins. It's set by paper trading. On exchanges like COMEX, massive banks trade paper silver contracts that represent silver that often doesn't even exist. These contracts can be created in unlimited amounts with a click of a button. No mining, no delivery, just paper. When enough paper silver is dumped into the market at once, the price drops instantly. It doesn't matter if real-world demand is exploding. Paper volume overwhelms reality. Now here's where it gets interesting. A handful of large banks control an enormous portion of these paper silver positions. Over the years, data has repeatedly shown extreme concentration, where just a few players hold massive short positions against silver. That means they profit when silver prices stay low or fall. Imagine any other market where a few institutions had that much control. It wouldn't be allowed. Yet in silver, it's been normalized. And this doesn't happen randomly. Price smashes often occur at specific times, like low-volume trading hours or right after bullish news. You'll see silver suddenly drop hard within minutes, even when nothing negative has happened. That's not natural selling. That's price control. It's designed to break momentum, scare investors, and maintain confidence in paper assets instead. Why would anyone want silver suppressed? Because silver is the enemy of fiat currency. When silver rises sharply, it sends a message that paper money is losing value. It exposes inflation. It exposes debt. It exposes the weakness of the financial system. Governments and central banks don't want that message spreading. A cheap silver price helps maintain the illusion of stability. There's also the bond market, the dollar, and interest rates to consider. A rapidly rising silver price would force people to ask uncomfortable questions. Why is inflation still here? Why is debt exploding? Why does money buy less every year? Suppressing silver helps delay those questions. But here's the part most people miss. Physical silver and paper silver are not the same thing. There is far more paper silver than actual silver available for delivery. Some estimates suggest hundreds of paper claims exist for every single ounce of real silver. That system only works as long as most people never ask for the real metal. The moment confidence breaks, the system breaks. And we're starting to see cracks. Premiums on physical silver often stay high even when paper prices drop. That's a huge red flag. It means real silver is scarce, while the paper market pretends it's abundant. Those two realities can't stay disconnected forever. Industrial demand is another pressure point. Green energy policies require massive amounts of silver. Solar panels alone consume huge volumes every year. Electric vehicles use more silver than traditional cars. Medical and military uses are non-negotiable. You can't replace silver easily. There is no cheap substitute with the same properties. Demand is structural, not optional. At the same time, mining silver is becoming harder. Ore grades are declining. Costs are rising. Environmental regulations are tightening. New discoveries are rare. You can't just flip a switch and double supply. That imbalance is real, and it's growing. So why hasn't the price reflected this yet? Because paper control still dominates. But control doesn't mean permanence. Every manipulation scheme in history eventually ends the same way. Not with a slow adjustment, but with a violent reset. If even a small percentage of paper silver holders demand physical delivery, the system faces a serious problem. There simply isn't enough silver to go around. That's when price discovery returns. And when it does, it doesn't move slowly. It reprices fast. This is why silver volatility scares institutions. Silver is small compared to gold. It doesn't take much capital to move it. When sentiment flips, silver doesn't crawl. It explodes. That's exactly what happened in past cycles. Long periods of suppression followed by sudden, aggressive rallies that shocked the market. Now, this is not about getting rich overnight. This is about understanding the game. When you know the rules, you stop reacting emotionally. You stop being shaken out by artificial drops. You start seeing price smashes for what they are, not signals of weakness, but signs of control being maintained under pressure. At WealthWave, we don't tell you what to buy or sell. We focus on understanding reality. And the reality is this. Silver is one of the most distorted markets in the financial system. That distortion cannot last forever. Ask yourself this. If silver is truly abundant and unwanted, why do central banks and governments hold it? Why do industrial users secure long-term supply contracts? Why do physical shortages keep appearing? The actions don't match the price. And markets eventually correct that kind of lie. The real question isn't if silver breaks free. It's when. And when it does, most people will be late. They'll chase headlines, not fundamentals. They'll react instead of prepare. If this video made you see silver differently, let me know in the comments. Do you think silver is manipulated, or do you think the market is fair? I read the comments, and strong discussions help this message reach more people. Share this video with someone who still thinks the silver price is purely supply and demand, because once this information spreads, it can't be ignored. Thanks for watching WealthWave. Stay sharp, stay informed, and I'll see you in the next one.